I'm Adelaide Steedley, and I'm the director of the Citymark project within the Center for Affordable Housing Finance in Africa, which is a standalone nonprofit organization that was started as an initiative within Finmark Trust, and in the last 6 months we've become a standalone organization. And so the mission of the organization is, through research and policy analysis and conversations at the local and national level in South Africa and across Africa, ways to expand access to housing finance. So we don't provide finance directly, but we're in the space, in the intersection between lenders and investors and developers and end users and consumers, and sort of expanding access to housing finance. What Citymark is about, it's a dashboard, it's a business intelligence dashboard that we've built over the last 3 years, not necessarily as an end in itself, but one of the most important factors driving development in particular areas is whether or not there's access to reliable, accurate, timely data that can tell us about markets. And so a lot of times we deal with investors and developers who'd be keen to going into Soweto, who'd be keen to go to Khayelitsha, where? And so what the tool does is, by using readily accessible data, the deeds registry data and census data, pulling together some indicators that we know through our experience developers and investors need to know before they move into places. We do that in this dashboard, but then we use it to drive the story that we want to tell about particular areas. We do that through the lens of opportunity. And what that means is, instead of saying these are all the places you don't want to go, our belief is, you can drive through some neighborhoods and figure out what you don't want to go, where you don't want to go. The challenge and the issue and the opportunity for us is, where do you want to go? Where should you go? So understanding that, what we know is every neighborhood, we do our work at the neighborhood level across the 9 major metros in South Africa. Right now, the work that we're doing is in South Africa, primarily because that's where the data is, other countries where the data are. Other countries don't have access to the same rich kinds of data. For example, South Africa, the Census Bureau released its data digitally for the first time ever about 2 years ago, which means now we can start to compare markets to demographics in ways we never could before, very quickly, very efficiently, and we're doing a lot of work because that now has come available. That's not available in other places yet, but we can use this type of work to sort of incentivize and say, this is the kind of thing that could be done if you had your data available digitally at the local level. Through those indicators, we're able to begin to differentiate and tell the story of a neighborhood's business model, a neighborhood's economic housing model. So it's not just enough to say that this is how many properties exist, this is how many sales happened. We look at that over time. We divide those, we create ratios, we create an index to give city managers and planners and folks that want to incentivize investment into neighborhoods and into areas the ways to differentiate. So Soweto, for example, has 91 suburbs. Every single one of them, based on where they're located, based on their history, based on the type of housing that exists, they have a different typology, they have different strengths, different opportunities, different demand, needs. They can have, we found 2 neighborhoods right next to each other that have the same population, the same number of residential properties on the deeds registry, but completely different numbers of population. So the housing solutions in those neighborhoods would be very different. So city managers, for example, have a lot of ideas and have tested a lot of ideas for different programs that can create rental housing, can create, do mortgage subsidies, build fully subsidized houses, a whole range of things. What we can help city managers do is to differentiate those neighborhoods to figure out where the best strategy is best deployed. So for example, don't put a rental let me say it the other way. Put rental development, if you want to entice rental development in dense, rapidly growing areas that are particularly well situated. If you want to do a home ownership program, if you want to incentivize home ownership, Those types of programs are better suited in different types of housing markets. So what we want to do is we want to give city managers the ability to differentiate across housing markets so they're better positioned to put housing programs in the housing markets where they're more likely to achieve success. The way they can access our information, we've got a dashboard on our website, which is www.housingfinanceafrica.org and then /Citymark. And you can go on there and you can see we've got a dashboard that's got 6 of the most important indicators of housing markets. We've aggregated that into an index so you can see and you can compare across a metro how housing markets are growing, which is one aspect. It's not the only, obviously, but it's one key aspect. We have worked with our partners to create housing market reports. So developers and banks in particular are looking at a housing development in a particular neighborhood. And so we pull out, we have 100 or so indicators. We create reports that suggest what the what the business models are of the 19, 30, 40 suburbs are around the area. We can write that up in a report. Another way they can access our services is we're in the process of building dashboards. So we can talk to city managers and say, what are your areas? What are your priorities? What's your skill base? A huge part of our mission is to build the capacity at the city level to understand housing, because we understand a lot of times people are put in positions because they're good managers, not because they know housing development, and that's okay. So we want to give them the tool to say, and a dashboard allows you to start moving back and forth through the neighborhood, seeing the indicators move over time. And then another one, obviously, is we sit down and work out strategy. So I have 20 years of experience in housing, all kinds of rental and homeownership housing programs all across the United States. I've been here for 3.5 years and I've learned a lot with the cities that we're working with on what different priorities and strategies are. And we can engage with folks on that as well. And then use the dashboard and use the reports to evidence why a certain program might be deployed in certain places. A big part of what we're trying to do is to entice private sector investment into cities. One of the cases that we make is for every private dollar that comes in, that's a dollar the city didn't have to spend. We actually, we've had a couple folks say, why should I care about private sector investment, private development if I'm the city? And I say, because that's a rand you don't have to spend. So a big part of our work is understanding the dynamics of housing markets from a private sector standpoint so that we can understand more about why they come in and out of particular areas and why they move. So some of the trends, some of the ways that we do that is to split out the housing market into 3 bands. So activity below 250,000 rands, activity between 250 and 500,000 rands, and then activity over 500. Just as an aside, in our work going forward, we're going to add a layer, we're bumping those up, and then we're going to add a layer of 1.2 million so we can begin to understand more about how the markets intersect. Because a lot of people are moving in that middle space, which is fantastic. We want to show how that middle space engages with the top of the market more specifically. So a couple of 3 things that we noticed right away is that most of the formal market takes place over 500,000 rands, which I think we understood. A couple things that we found was that the markets are much more active so there's more sales transactions happening at the lower end of the market, even if the value of those transactions are lower. It's growing faster. So the proportion of these properties under 500,000 rands are growing as a proportion of the overall market. So one of the things we tell people is the affordable market is not a niche market. In South Africa, the affordable market is the market. To a certain extent, the top market is becoming more and more of a niche. So what we're seeing is our private sector clients coming to us and saying, you know what, I think we understand now that the markets are different. How do we get into that space? Where are the opportunities? Where are the opportunities from a programmatic and a cost standpoint? And then where are our opportunities on the ground? And where should we be, what kinds of growth should we be looking for? And where does it exist? And so how is Soweto growing? How is, some of the different areas that we're looking at, Umhlanga Hills in Durban. And so some of the ways they're looking at are lending rates. So the rates at which loans are taking place. That was one of the things that you referred to, is that the growth of what's called other lenders, which is all the lending on the title deeds records that aren't connected to the big four banks. So that's SA Home Loans, Investec, Integer, and then a category that our data source calls other lending, which could be seller finance. It could be a whole range of finance that we can't identify. The point is, our analyses are showing that that is becoming a larger portion of the lending market, which means that a lot of those investors, a lot of those players don't have the same kind of constraints, for better or for worse, than the big four banks do. So they can be a little bit more innovative, take a little bit more risk, and move more quickly. The other thing too is that the sense of competition between the banks is very intense. So one of the things we see is that when one bank moves, the rest of them move. And so I think cities can take advantage, if they understand that that's the dynamic that's happening. We'd be glad to show them how it's happening, and it's not happening all over, but it's happening in certain places. That's how we can help them develop new partnerships and bring this data back to the lenders, because they may not even know that this dynamic is taking place. Just one other point that we make is, I think a very important point that we're making, is that we measured the equity of homes. This is a huge point, and it's a huge capacity that I would love to talk to cities about more specifically. So over the last 20 years, up to 3 million units of housing have been built in cities and towns and rural areas across South Africa. In the meantime, there's not been as much lending in those particular areas for a whole bunch of reasons we understand, and that's fine. So what we're discovering is that when you measure the amount of equity of the market overall, about 40% of the average value of a home is actually owned by the homeowner. So it's a benchmark, it's a measure that we get from our data source that gives us an estimate of the outstanding bonds, the value of the outstanding bonds based on a bunch of methodology that they use. The point is, in the regular market, about 40% of that value, so the average is 384,000 rands of the value of homes in South Africa are equity. What that means is, for most of us that are trying to find homes, they take that money and then you invest it, and that's how you move up the housing continuum. So instead of borrowing 30,000 rands, instead of needing 30,000 rands to buy the average house, you only need 24,000 rands to buy the average house. What we discovered when we looked at the property markets under 500,000 rands is that 80% of the value of those homes are owned by the homeowners. That's because of less lending and because of all that government investment and, frankly, the free houses. So what it means is that can double the purchasing power of those homeowners as those restrictions roll off. There's a huge amount of asset that the government can lead on to sort of work with banks, work with investors, and say, look, we want to create low-cost, lower-priced mortgage products so that that homeowner can sell that house and move up the housing continuum. Banks are reluctant to make small loans. So, for example, what I'm talking about is the homeowner that has that equity. They need somebody to sell their house to in order to capture that equity to take it up the housing continuum. So we can encourage folks to build up the housing continuum by saying, look, in 2 or 3 or 4 years, and we've made this case in Durban, the 1,800 units that they built in 2009 can be applied to your housing because they can take that equity and put it in your house. Don't just look at the amount of income that the families are using, take into consideration all the equity that's been created. Except for the fact that if the people that want to sell those houses can't find people to sell them to, and one of the reasons is because lenders won't make loans that low, we can't unlock that value. So yes, the equity is there in those houses. Congratulations, well done to the governments. What can governments do with its investor partners to bring down the loan limits so that that equity can be unlocked? And so that's a case we're making to developers, and that's very much a case we want to make to government to say, you can use that asset again. You spent 20 years investing in it. Let's figure out programs that can leverage that asset again and go forth and continue to build up the assets of the folks in South Africa.